Here we go with the Manhattan market pulse. Let's start with sales. The contract activity was 592 contracts signed in January, almost 38% down compared to a year ago, and also over 23% down compared to the 10-year historical average. The median sales price now stands at $1,075,000, down 14% from a year ago. The supply, or the number of units currently on the market, is currently a little over 6,000 units, up 2.7% from a year ago. While the number of pending sales is a little over 2,100 units, which is a value that's almost 42% below from a year ago. The result is a market pulse, pending to active ratio of 0.36, and this reminds us that, of course, we're still in buyer's market territory. The luxury segment, there were 25 luxury contracts signed at over $4 million last week, 4 less than the week prior, but still the second week in a row that we have over 20 luxury contracts signed. Obviously, this is the most active portion of the market. The most expensive signed contract last week was a 12th floor at 778 Park Avenue, and that had an asking price of $27.9 million. The rental market, there were over 3,400 leases signed in January, which is a very good level of activity, almost 9% higher than a year ago. And the median rental price was also slightly up, plus 1.2% from last January, to reach a level of just over $4,000. So still a good amount of activity. Prices are not moving much from the record levels of last summer, but it's understandable. It's now winter. The colder months also bring usually a slower rental market. So prices have stabilized after having reached record levels last summer, but weak supply and premium priced housing market have continued to fan demand for rentals.